Hello and welcome back to Explain the Charts. Today, April 7th, 2025, we're taking a comprehensive look at Meta, ticker symbol Meta. We'll analyze both recent news and the chart data to formulate a well-rounded perspective. Recent headlines are dominated by the fallout from President Trump's new tariffs, causing market turmoil and prompting some analysts to suggest a buy-the-dip strategy for Meta. We'll see if the charts agree with that sentiment. First, let's examine the daily chart. We can see a significant pullback in early April 2025, correlating with news of the market downturn due to the tariffs. Before that pullback, there was a very strong period of upward movement from the beginning of 2025 and going into February, with Meta reaching new 52-week highs. The initial drop was large, followed by a recovery before a second drop brought us to where we are today. Now let's narrow in and shift to the hourly chart to analyze recent price action more closely. We want to examine this recent move down from late March into early April 2025 and try to get a clearer picture as to where things may go from here. There seems to be support around the $504 level, as the stock has failed to go lower than that twice in recent trading days, which could indicate an area to possibly start a long position. However, there is some serious resistance just above where the stock is now, around $516 to $520 a share. If the stock breaks through that resistance, it would be a good indicator to increase a long position or initiate one if you haven't already. Let's examine what we may want to look for if that doesn't happen. If that 504 support level is broken, that may mean the stock will fall even lower. To get a more granular view of the intraday trading, let's switch to the 15-minute chart, but we'll keep our time range the same. A head and shoulders type pattern seems to have formed over the last few trading days, which can be a bearish indicator. This would indicate that we would want to wait for confirmation before entering a long position. Another possible bearish indicator is the 50-day moving average crossing over the 200-day moving average, but we don't have those indicators available on this chart. Ultimately, the market turmoil from the tariffs is a significant factor. Meta plans to spend significantly on AI infrastructure. If the market can weather the tariff storm and Meta shows strong AI growth, some of the analysts are predicting $636 to $753 per share by the end of the year. However, I am not a financial advisor, and this is not financial advice. So, keep an eye on that 504 support. If it holds and Meta breaks that resistance, be prepared to go long. Otherwise, be prepared to go short.